The company that owns Rocket Mortgage, the second largest provider of home mortgages in the United States, has just been sued by the Consumer Financial Protection Bureau, and in this video, I'm going to tell you why. So let's get to it. I'm Fleming, your local Bay Area real estate agent, and on this channel we cover everything to do with Bay Area real estate. So whether you're thinking of moving to the area, moving from the area, or even moving within the area, chances are there's something on this channel for you. So if you got questions, please, that's why I do these videos. Feel free to reach out to me. My contact information is in the video description below. Now in this video, I'm going to explain to you why the company that owns Rocket Mortgage and a very large real estate brokerage has been sued by the Consumer Financial Protection Bureau for violating what is known as RESPA. And RESPA stands for the Real Estate Settlement Procedures Act. The suit was announced on December 23rd, 2024, and it went a little bit under the radar as far as reporting just due to the holidays, but it is still a significant suit because Rocket is the second largest provider of mortgages to consumers in the United States. So forcing them to change their business practices may be very beneficial to consumers. Now, what have Rocket and this large real estate brokerage known as the Mitchell Group been accused of? RESPA is a law that came into effect in December of 1974, and it has a few major provisions. The first is mandating the disclosure of fees that consumers are being charged. The second is the prevention of kickbacks or referral fees from one service party to another service party for business. This increased the cost of services to consumers and gave service providers an incentive to steer consumers to one service provider or another for their own financial gain. The third aspect of RESPA is to prevent abusive behaviors that the mortgage industry had practiced before the implementation of the law. Providing leads to a broker is not a RESPA violation. However, how Rocket chose to monitor and allocate future leads to their broker partners, that is what the CFPB has concerns about. Not only did Rocket monitor how successful the real estate agent partner was in referring that business back to Rocket for the mortgage, but they also apparently looked at whether that brokerage was giving them additional business that Rocket didn't refer to them. Furthermore, Rocket restricted the broker and their affiliate agents from being able to tell consumers that there were other lenders that offer products and services that Rocket may not offer. An example of this in certain areas is first-time homebuyer programs. So if you as a consumer went to a Rocket Homes website looking for assistance with finding a home, Rocket would expect the real estate agent that they referred your information to in turn turn around and refer the mortgage back to Rocket Mortgage. And if that agent did not do that, then Rocket would discontinue the relationship. So essentially, that is a referral fee or a kickback. I'm giving you the opportunity as a real estate agent to earn more money through the referrals I give you if, and only if, you give me the loan that comes out of that referral. The CFPB is saying that's illegal under RESPA. This also hurt consumers because if there were loan products and services that Rocket did not offer in your area, your real estate agent was prevented from telling you about them. They could not refer you to another mortgage provider that maybe could have offered you a better product for your needs. What is the CFPB asking for from the company that owns Rocket Mortgage and the real estate brokerage, the Mitchell Group, as punishment for their RESPA law violations? Well, there are three things they're asking for. One, they want them to stop the referral program that they've been operating. Second, they're asking for a victims' compensation fund. And third, they're asking for civil monetary penalties to be paid to the CFPB by the companies involved. This suit is in its early days. Today is November 30th, 2024. So this suit is only a week old. So there's a lot of legal maneuvering that's going on. We don't know how it's going to turn out. But this is a very important story and a very important lesson for consumers. If any party involved with a real estate transaction that you're involved with insist or require that you work with a specific service provider, you should have your antenna raised. Any real estate brokerage, agent, or mortgage consultant should be able to provide you with multiple potential service providers if you ask for them. This story of alleged bad corporate behavior is unfortunately not unique. I actually did a recent video on how property management companies are using an algorithm to drive up the cost of rentals. So I'll post a link to that somewhere here on the page. If you have questions about Bay Area real estate, that's why I do these videos. My contact information is in the video description below. If you enjoyed the video, give it a thumbs up so YouTube knows to show it to other people with interests similar to yourself. Hit the subscribe button and hit that bell notification so you know each and every time I drop a new video, and I'll catch you in the next video.